Hey, welcome to the Evolution Real Estate Podcast. So our tagline, this is a first run for us, so be kind for our first podcast with this, but our tagline is staying up with the ever-changing modern real estate market. So these are our conversations Scott, who will introduce here in a second, and I are doing on a daily basis anyway. So our thought is, why not put it out there and have some transparency in real estate and all the different changes that are going on. It allows us then to talk about it, and for you as the viewer to learn as much as you can from it. So Scott, kind of give us an intro of yourself and why people would want to listen to you and your expertise.
Justus, hey, how you doing? My name's Scott Ebel. I'm with Greater Midwest Realty here in Blaine. I've been selling real estate for about 25 years and still love it. Still really enjoy helping people and have a lot of fun with it. I've got somewhat of a diverse background. Maybe if you can see over my shoulder here that I proudly display the U.S. Army emblem. And so I also, as being a realtor, owner, broker in the past, having an office and what have you. I also served in the military for the last 33 years. A lot of great things, a lot of great memories, a lot of great friends. Wouldn't take it away, or always would definitely do it again, I guess is what I'm trying to say. But so I bring that experience of being a military officer and some of that and working with people and just kind of the team concept to real estate, and brought that over to real estate as I've built my career over the last 25 years of selling real estate. So it's kind of a little bit of background, and I'm sure as we go forward we'll share more, but kind of a quick intro of who I am but where I sell is, I guess, in the northern metro, all over the Twin Cities really, and I've sold as far as way up north to way down south, so that's not a restrictor either, especially in today's world and technology. You can really access properties all over. So, but love helping first-time home buyers, move-up buyers, helping people buy and sell both. So that's kind of a quick synopsis of my background and what I love to do. So,
yeah, a little bit about me. I work for Bell Bank Mortgage. I'm a mortgage loan officer. So if you're a first-time home buyer or someone like that, I'm the guy who does the financing. So my background, I actually, like most people in this area of, in the real estate world, we come from somewhere else. So my background, I was a licensed therapist and licensed school counselor. And then I taught community college psychology courses until I met someone who convinced me to jump ship and try out the mortgage side of things. So I enjoy it. I love it. Been doing it for over 5 years now, and I'm at a wonderful company here in the cities, and we're able to do real estate all over the country, and we're like the 7th largest privately owned bank in the country. So that is a real sweet spot, because then we have all the amenities and everything that the big boys have, but we have way more flexibility and customer service like you'd find in a credit union. So I find myself in a really, really good spot. And just to, one thing I did miss in our intros too, just let viewers here know that our format here is going to be kind of informal. So again, kind of like I mentioned, we're having these conversations anyway. So we figured, why not put it on film and put it out there? Our thought process is to have this be bi-weekly. Sometimes we might have more, but we're thinking a bi-weekly thing. Length of the podcast, we're probably going to keep it around 10 minutes or so. So that way, because everyone who's watching this is in and out and everyone's busy anyway. And you'll be able to find this online through, YouTube, Facebook, Instagram, all that. But then you'll also be able to find it on your podcast site. So anywhere you can find a podcast, it'll be on there. So if you want the visual side of things, you know where to find that. If you just want the audio, it'll be on the podcast sites. So the way we want to format this thing is we'll intro the podcast, kind of what's going on with it, do a quick intro of each other in case someone's watching the episode for the first time. And then we got two kind of ways we want to shape it. We're going to talk about the interesting things that have come up since our last episode. And then we have kind of some scheduled content that we go through. And that's what the episode mainly, the main hub of it will be about. So just going right into it, Scott, what's something interesting that's happened to you since our last episode that we haven't done?
One thing I want to talk about that recently happened was trying to get to closing and buyers. You go through, you work with somebody like yourself and you get pre-approved and get pre-qualified. And I'm sure you've got some accolades and stories to tell and share with people. But, once somebody goes and gets pre-qualified with a loan officer, they think that pretty much the process is done. And not to say that couldn't be almost further from the truth, because you got to get the football over the goal line and kind of get there. But what I recently had happen was that very situation where we were going to closing, and these buyers, in anticipation of their new home and buying their new home, they went out furniture shopping. And I don't know if this has ever happened to anybody, and we did have a conversation. So I can't say that we didn't have the conversation. I think they may have forgot or what have you. And then went out to a local furniture store, open up a line of credit, but put it on layaway, knew that they couldn't buy anything now, but thought that just by putting it on layaway, that it would be okay, that it was maybe a different way of purchasing something and what have you. Well, what had happened is that obviously that's a credit pull. And as you know, and many other folks know out there, that prior to going to closing, a buyer's credit is going to get pulled again right before closing to make sure no real differences from when the pre-qualification was set up. And of course that kind of happened, and all of a sudden, and it was a good thing the loan officer pulled credit ahead of time, or it gave us a little time to react. But nonetheless, what had happened is that basically because of that, it did affect their loan to value and their credit, and they couldn't have any more debt, particularly where they're at on this purchase. So, and it's something this other loan officer happened to do. We didn't happen to do this deal together, but they were able to reverse it and actually work with the furniture company and basically shut down that line, show that it would have been closed, return the furniture, and then proceed. But most people don't realize that it's not done until you go to closing and you get to closing. Even though you have the conversation, people get excited and they want to keep moving forward, right? It's a planning and execution phase, and just got to get things done, and without knowing what that could mean or what it could affect. And obviously in this case, that was kind of it was a good news story in a way that we were able to get it done for them, and they still did purchase and close a home. But just know that and I'm sure you can share some things with that, of people thinking, hey, I got pre-qualified, I'm good. There's nothing else I need to do, or it's not going to affect. So that was just one story I thought I'd share with our viewers, that just know that don't go out and buy anything until after you get done with closing. So.
Yeah, that's super important. I remember when I closed on my first house, is actually before I was in the mortgage industry. My loan officer at the time said, "Don't even go buy gas. Get money from your family. Just keep everything." So my, not being in the industry at that time, my numbers must have been pretty tight. Right. So yeah, and just so you know, or clients and viewers know, there is a soft pull about 10 days out from closing. So just like a Credit Karma, how they get those numbers and they're not actually pulling your credit, that's what we're doing about 10 days prior to closing to see if anything's changed, see if you've racked up credit card bills, see if you've had any new credit pulls. And that's probably exactly what happened to your client there, that once, that it got close to closing, they pulled that and said, hey, what's this Slumberland thing going on? So don't charge anything up, and have, before you do anything credit wise, if you're in the middle of a pre-approval process, talk to your loan officer before you do anything. Sure. Get permission to do that before you pull on your credit at all.
Right.
Yeah. Okay. So, and then moving on to my topic, I had and you'll probably be able to speak to this from doing listings, but I had an unfortunate situation with a lady who we were trying to get pre-approved. She currently had a house that she was in the process of selling, and then she was going to move in with her parents. In the meantime, to go find a house, the whole thought process there is so she can go non-contingent, so she wouldn't have a house to sell in order to buy. She would have sold it prior to. So, that process went fine. That their home got delayed in it being closed. Her sold home got delayed by about a month and a half. I don't know what was going on her side of things, but it got delayed for a month and a half. Mm-hmm. And her thought process on that was, well, I know my house is going to get sold, so I'm not going to make a mortgage payment because I know it's going to get sold. And then it got delayed a month and a half. So all of a sudden she went from making her on-time payments to now having a 60-day mortgage late. And for anyone that doesn't know, a mortgage late is like probably one of the worst things you can have on your credit report when you're trying to get pre-approved for a mortgage, because that's directly in line with what you're trying to get pre-approved for. And you're saying, well, now I have a late. And it goes from a 60-day, or it goes from a 30 to a 60 to a 90-day late. A 90-day late is kind of like death. But her credit score went from like a 724 to a 608. And if it's below 620, you can't even get approved for a mortgage unless you're doing some off-site kind of mortgage, which you probably wouldn't want to do. So she went from being pre-approved, and now she can't buy a house, and now we got to do credit repair, and now she's looking at a FHA loan compared to conventional loan she was doing before. So it's a whole different ballgame now. She's probably at least 6 months to maybe a year out from being able to purchase a home, even simply with FHA.
Sure. Wow, what a difference, huh?
Yeah. So make your payment. Don't make your housing payments. It might sound simple and like kind of like a no-brainer, but you just always make your payments up until you don't have to.
Sure.
You ever experienced anything like that, or had any?
I can't, not in my recent history that I can think about, but I could see how it, somebody might think, well, I'm selling my house. What does it matter? They can just take the payment or make there's a payoff, and the payoff will just be that much more or whatever, and just take it from the proceeds of the sale when I sell. But no, it's just, I think that's really why we want to do this podcast, is try and bring to light the day-to-day activities and kind of everyday happenings that really are not, seem to be common sense, but maybe they're not, and some people kind of think, well, it should, and just bring that to light, and hopefully it will keep someone else from having to be in that situation or ending up in that situation just by purely not knowing, right?
Yeah.
And that's the hope of doing some of these videos to share some of that common practices and good practices. So yeah, good stuff.
Yeah. So kind of alluding into that, common practices and kind of just the everyday life in the real estate world. Let's start with agency. So kind of our scheduled content for today is about agency for realtors and loan officers. So can you kind of talk about what agency means with a real estate agent and how that plays with clients?
Sure, absolutely. Agency is very important to be brought up in any, what is stated is early in any relationship, right? And whenever, as a professional or a licensed real estate agent or a broker, whenever you start to work with the general public, you should always indicate and or share with them, who you are, what you do, and who you do it for, really. And so what is stated that agency, it's not a contract by any means, but it's a disclosure. And there's 4 different, currently in the state of Minnesota, there's 4 different ways that people can be represented. And those 4 different ways are, the first one is a seller, landlord broker, where you represent the seller only. The second way is a buyer broker, where you're representing the buyer. Third way is called dual agency. Dual agency broker representation can come about a couple of different ways. Whereas it has to be agreed upon by both parties, meaning both the seller and the buyer, right? That they're aware and they acknowledge and they accept or are okay with the fact if is as a licensed agent or a broker, that you represent both parties, represent both the buyer and the seller. And in the state of Minnesota, that's still totally fine. It is a type of agency that is does happen. Doesn't happen all the time, but it certainly can. So that's the third way where you represent both parties. So there's another way that dual agency can come about also, or that it does, is that when I, as a licensed broker, represent, we'll say, the sellers in a transaction, right? We go through the necessary paperwork. We talk about agency. We go through agency relationships, and I'm going to represent a seller to help them sell their home. Now, so when we go through that process and talk about that, what could happen is that another agent here at Greater Midwest, we've got a lot of agents, right? And so there's a lot of other agents that could be representing clients as a buyer client, as a buyer representative. And so another way that dual agency can come about is that if I were, as I'm licensed and hold my broker's license with Greater Midwest here, that I'm representing the seller, but if another agent within our agency or our brokerage represents a buyer, because we both hold our license at the same agency, that too creates dual agency, or that's a second way. So those are the two ways that dual agency come about. And then the third or the fourth way is facilitation, whereas a broker or salesperson performs any services for a buyer or a seller, or buyer tenant or seller landlord, but does not represent either in a fiduciary capacity as a buyer tenant. So basically, a facilitator broker is a salesperson that does not owe any party any of the fiduciary duties listed below except for confidentiality. And when I talk about fiduciary responsibility, there's what's within real estate. There's 7 fiduciary responsibilities that we have, right? And that's loyalty, obedience, disclosure, confidentiality, reasonable care, and accounting. And so actually it's 6, not 7, but so those are the things in which it's kind of our code of conduct and how we conduct ourselves. Okay. So within facilitation, as a facilitator, the only thing that if you're acting only as a facilitator, what is owed to those clients is confidentiality. All right. And so it's important to talk about agency, because not always do people understand who's who in the zoo, if you would, and who represents who whenever you're entering into a real estate transaction.
Does that facilitation sometimes get complicated because you want to do more, but you're not contracted to do more?
It can. It definitely can. Yeah. It is a limiting agency or limiting representation, more so, definitely. Mm-hmm.
Yeah, that seems like that would be kind of hard.
So
on your end of it.
A little bit, yeah. Most of the time we do represent either a buyer or seller, or it can be a dual agency. Those are more common than facilitating. Facilitating usually comes apart or comes to play when both parties already have agreed to terms and they have already found each other and sought out, maybe like a family member or family members that wanted to buy and sell some real estate, and you basically are facilitating the transaction, helping them through navigate the paperwork and all that it takes to get to closing.
That makes sense.
So that's kind of what facilitation, how that would come into play, or how you would see that play out. So how about in the as a loan officer? What about for you? I mean, is there agency for loan officers? Is there how does that work for you guys?
Yeah, it's a good question. We don't necessarily have like a contract or anything that's written up in that sense. Our agency is kind of like locking a loan. So when you lock a loan, you're doing an acknowledging that you are kind of with that company, you are with that broker who you're locking with, and then you sign the intent to proceed with your disclosures. And that would probably be as closely related to agency with locking it and the intent to proceed. Now, in our world, we get shopped and that kind of stuff happens. And because people want the best rate, they want the best deal. And just like online dating, there's always, there could always be someone else. There could always be something else that's better. So kind of the way I work with clients to get around that, it's because clients want to work with the company I'm at Bell, because it's known in the community. It's a good company. I have really good support here. So what I usually do with clients is, if they are interest rate averse, if for some reason we're not better, I call it coupon shopping. And so I say, you want to get your pre-approval with me, you want to get the loan with me and with Bell. So what we're going to do is we're going to proceed forward as if you're going with me. And then when we get a purchase agreement, because that's really when it matters, when the interest rate, because you can't lock until you have a purchase agreement on a house.
Right.
And so when clients get that purchase agreement, give them an estimate and say, okay, if you want to go look for rates, this is what here's an estimate. Take this to different places and see what kind of terms you can get. And then they take my estimate to these places. Now, keep in mind, when you shop for rates, it has to be the same day. So you can't use previous days information or anything like that, because then it's not apples to apples. But they take this estimate to a credit union. They take it to a Wells Fargo, a US bank, and say, hey, what kind of rate can you do based on this? And if for some reason, if we're worse, we'll have them get an estimate from that company. And we call it coupon shopping, because then we use that. And for fair lending laws, we use that, give it to our lock desk and say, hey, match this rate. All of a sudden, if we're worse, we get this matched rate. Everyone's happy because now they get the matched rate and they're still working with me and with Bell. So that's kind of how our agency and our what I call coupon shopping works.
Okay. Well, that's great to know. Great to know.
Yeah. So clients who are, it helps alleviate that shopping, and then helps keep clients, I guess, more loyal on our side.
Sure.
So with that, once we lock a loan and it closes and everything, once it closes, obviously that's kind of when everyone in our industry gets paid. And I know a lot of first-time home buyers, they're afraid to ask the question, but they want to know, how do you get paid? How does a real estate agent get paid? How does a loan officer get paid? What would you say to that question for real estate, a realtor?
Well, there's a number of ways and that's why it's so important to discuss agency up front, right? To know who's who and kind of who's working for who. Especially when, if you're working on a buy side with some buyers and there's an open house. I mean, it's been an absolutely crazy market and competitive market. So everybody's trying to find an edge or trying to find a way to get that perfect home. So it's real important whenever, maybe buyers that you're working with, in the situation of working with a buyer, that they may want to go to an open house. I know because of the pandemic and some of those things, we haven't had a lot of open houses. They've had them. Or they, I've held open houses, but not as much. But in a case where if a buyer that you're working with want to go without you or without a schedule, normally we schedule a showing and we take and go and walk through the home together and go look at properties and what have you. But I'm just saying, in another situation where if you show up to an open house, just know that whoever's in that open house, they work for the seller. They work for the seller in regards to agency, being paid by the seller, all of that. The one unknown, or kind of the weird part about how we actually earn a commission or earn a fee for a service is whenever we represent a buyer, typically, now the agreement or the contract is with the client, right? And so we do that paperwork is filled out as such, and we do work with them, but typically, because of how our MLS is structured and what happens is what's called, there's a co-op sale or a co-op offering to the buyer broker that's published through the MLS, that the sellers have agreed to compensate anyone, a buyer's agent, if you would, if they were to find a buyer for them. And that's put out onto the MLS. And so the weird part about it is that whenever an agent is working with a buyer, the contract's with them, but typically, we would be, when we get to closing and that transaction is completed, that's when a buyer's agent would be paid actually from the sale of the home, from the sellers, if that makes sense. So that's kind of in a nutshell, how we get paid, and how that transpires. Any questions about that or anything that I didn't cover?
No, yeah, I mean,
that makes sense.
So yeah, and you mentioned your commission. So
yeah,
that being said, you're probably just like me and you don't get paid until it closes.
Correct. I mean,
So
sometimes agents will ask for a retainer, depending on, and or some fee upfront, and that's everybody's decision, everybody's business decision, however they want to conduct their business. But typically, I think by general, most agents, yes, we have to perform. It's a performance-oriented business. We get paid by our activity and our results, and so that's why a lot of times, we're result driven. We got to get you to the finish line. So
yeah. And then there's one thing that I know, because I put it on my estimates, and the way I explain it is it's the keep the lights on fee for the broker, but the real estate admin fee, is that kind of how you would describe it to first-time home buyers? That $499 or $495, or if you're way too expensive, $850 for your real estate admin fee. Would you call it like the keep the lights on fee for the broker?
Well, there's some of that. And yes, I think everybody varies, and there is no set standard for that. But yes, and pretty typical, pretty general in the industry, and has been for a number of years, that there is an additional administrative commission that is charged upon closing, that goes to the brokerage. And yes, it is a part of their, there is processing and file keeping. So I know here that if anyone, obviously we always have to retain those files for a minimum of 7 years, I think. And so if any of my clients, and so we've got duplicates and they're encrypted and backups to the files. But definitely, to have that and provide that in the future. And yes, there's overhead processing and storage, some of those fees, but yes, a lot of pretty common in the industry that there will be an admin. Not everybody charges it, but you will see it. So
yeah, and when you see that, that's something you as a buyer would directly pay. Where when it comes to real estate commissions, typically it's the seller that pays for both agents. Correct.
Correct, and there could be, yes, that's a good point, Justus. There could be an additional, and you'll see that fully disclosed when you go to closing on your ALTA statement, and should have that. Or you guys send out your CD, closing disclosure, correct? Ahead of time, a minimum of 3 days prior to closing. So which will just depict what the fees are and what the costs are and what it really is going to take to get to closing, how much they'll have to bring or what's needed.
Yeah. And if you're a client, you're obviously getting these estimates ahead of time from your mortgage guy anyway. So
sure.
On the loan officer side, it's not too different than that. I don't get paid until closing. So it has to close, and then I get paid based on the basis points, which is just a calculation on the loan amount. So we get paid on the loan amount up to the conforming limit. Conforming limit just means how big a loan amount can be where it's considered kind of a normal loan. And every year for the past couple of years, that's been increasing. And it could be as high as 625 next year, which is a change from this year when it was 548. But so we just get paid on basis points, and that each loan officer has a different contract with the company with what their amount of basis points is on that loan amount. And so in our end, we usually have to close at least 3 deals in order to catch up to maybe one realtor deal, just because of the way the pay structure is. But in my world, I'm W-2'd, which makes a whole lot easier for me when it comes to tax time and everything than a realtor who is considered self-employed. So arguably I'd prefer my way, but to get paid, because it's just easier on my end. But that's simply the way kind of the loan officer gets paid. Some loan officers might have clients pay like for credit reports up front or for appraisals up front, because then if a client leaves, then the loan officer has to eat those fees. I personally don't, but it is kind of common practice where you would pay those out of pocket up front. I don't do that, so I cover that until closing. And that's kind of common practice at Bell for that. But do you have anything?
It brings up a real good point, as far as that we do a lot of work for clients, and hope that we'll be able to, that people will stick with you and see it through. It is kind of the prime and the pump, and we understand that. But there is some sense of loyalty or some sense of reciprocation, hopefully, when dealing with the general public, is that when you enter into a relationship of sorts, if you would, we are commission based, and so, but we do a lot of work up front, and just hope so. Always hope that you can always get there, but I don't know. Sometimes it just doesn't always work that way. But
yeah. Answering calls on weekends and evenings and doing all that kind of stuff. So you kind of hope that you are able to build that rapport and that clientele trust it, because it's a trusting relationship both ways, because you're trusting us to be professionals and we're trusting you to stick with us to the end. So you bring up a good point on, since we are commission based or bonus or what have you, it's all based on the overall performance and them sticking with us to the end. So,
well, it does matter, you like to think that if you're doing a good job, that you'll be able to earn that fee for service in the end, and not, and not versus not, because a lot of work is done, and yeah. So, but that, just being transparent and fully honest, that's how we earn a living. And maybe sometimes it's good for people to understand that there is some importance in how we get paid, and it's not about us. It never is. It really shouldn't be. Transaction is always about the client and what they're trying to do and what we're trying to help them do. But it also important to be able to keep the lights on and pay our bills too, and get paid too in the end.
That's right. That's right.
So.
Yeah. Anything else to add?
No, I think for this week, I think that's a few topics that we covered, and hopefully the viewers will enjoy it and get some value from it. So
yeah, beautiful. Well, I'm with you there. So thanks for watching and listening to the Evolution Real Estate Podcast, where the evolution never stops.